morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. A brand new week and lots of cues to watch out for. First of all, that the crucial GDP data that came out, it was a sixer, so to say, given the fact that the 8.2% figure is a 6-quarter high. And let's not forget, it was a perfect Sunday for cricket lovers. Given the fact that we managed to beat South Africa, it was a nail-biting match. We won by 17 runs. But what's crucial is the fact that Virat Kohli, made a superb comeback, 135 runs, 7 sixes to mark the innings, and of course a good fitting reply to all those, who have been talking about retirement, etc. But yes, that's Kohli for you, made a comeback and silenced all of his critiques. So yes, Virat Kohli fans, Indian cricket fans, a great start to the ODI matches with South Africa after the debacle in Test cricket, and of course, not to forget, a great partnership between Rohit and Virat, of course. So yes, lots of action on the cricketing front, and we are waiting for the next one that's happening on the 3rd of December as well. I want to also mention that Virat Kohli managed to surpass Sachin Tendulkar and made 52 ODI centuries. The only, that's the biggest feat by any batter in a single format of cricket. So yes, smashing records there at the age of 37, Virat Kohli for you. So great, way to start the week when it comes to the cricketing world. But before we come to the GDP figures, quickly take a look at the top headlines. We'll also get you a review of the GDP figures with Latha Venkatesh. But before that, very quickly, top stories at this hour. Wall Street ended Friday's shortened trading session higher, with the Nasdaq up 150 points, Dow Jones gaining 290 points. Asian markets started on a mixed note, but the GIFT Nifty indicating a strong start for our markets. Crude prices rose more than 1% after OPEC Plus decides against earlier planned production rises in the first quarter of next year. Gold, meanwhile, heads for a fourth monthly gain. The winter session of Parliament begins today. The government is set to introduce 2 bills, the Central Excise Amendment Bill and the Health Security National Security Cess Bill that will replace GST compensation cess with higher excise duty on tobacco and a new security cess on pan masala. Sources in fact told CNBC-TV18 that the proposed cess will be imposed on the production capacity of manufacturers and will include an assessment of machines, processes and all aspects linked to production rather than the actual output. Auto sales for the month of November to trickle in today. Overall volume momentum expected to be positive. Key surprise in channel checks has been pickup in demand for commercial vehicles. And lastly, finance and real estate growth of over 10% and manufacturing growth of over 9% lift the GDP numbers in the second quarter. Government's chief economic advisor expects full year growth at 7% or higher compared to the earlier projection of around 6.5%. Well, we were talking about sixers in the cricketing ground, but of course there's been a sixer when it comes to the macroeconomic data as well. Joining me right now to talk about the GDP figures, Latha Venkatesh of CNBC-TV18. 6-quarter high, GDP 8.2%, but of course there's, the devil is in the details, so to say. Nominal GDP and the real GDP, the gap is fairly narrow.
Yes.
Put that into perspective for us, Latha.
No, you put your finger on it. That's it's a tale of two narratives. Should we look at the great real GDP number, or should we look at the somewhat modest nominal GDP number? In any case, there's no taking away that the growth is better than what everyone in the street expected. As you pointed out, manufacturing and services both, shouting above 9%. And within services, if you only took finance, real estate, insurance, the related sector, that's 10.2%. If you took other kinds of services like, public administration, defense, health, education, what you call other services, that's 9.7%. Yeah. Then you look at GDP from the way you spend money. Are you investing or are you consuming? Consumption is up 7.9%. Very good. I mean, it's the strongest in like many quarters. Gross fixed capital formation 7.3. Yeah. Both are good. We are firing on both cylinders. So, there's no complaint if you looked at the number that way. But ultimately, this deflator is what is a kind of a fly in the ointment. How do you count, say, hospitals? How do you count health, education? You take school revenues, college revenues, university revenues, hospital revenues, and then you deflate it with what?
Yeah.
The revenue are growing because prices have also risen and amount of services rendered has risen. you deflate it only with the WPI because you don't have a national doctor's service or a teacher's fees. And some of us, people who have ambitions to send to IB and, expensive courses, know that education inflation is serious. But what has the MOSPI deflated education and other services by 1.1%. So you start to wonder whether the real GDP is as good as it looks. And the other fly in the ointment is that current quarter, the nominal GDP will be even less. It will be 8%. And this is what gets filtered into corporate earnings.
Yeah.
Corporate earnings is not real.
Yeah.
It is nominal. It is volume plus value. And so if nominal is going to be that low, 8.78, it's going down, then will corporate earnings... Now look at Nifty earnings also in the second quarter. It is
flat.
2 to 3%.
Yeah.
Right? So if you're going to continue to have depressed earnings, but anyway, mid-cap was 30%.
Yeah.
The point is, that is what is worrying. And the other big worry is, will this take away the Reserve Bank's option to cut rates?
So that's the big dilemma they face, inflation at record lows, but now GDP has come in at 8.2. So, of course, the RBI governor has also said that there is room for more. But can they really justify in the face of this strong economic growth figure?
The market is deeply divided. There's one segment which says the governor has said that there is space for RBI to support growth. But he can always see, is there a space for need? Yeah, is there a need to support growth? Why don't we keep this ammunition for a later day? If there are, stock market debacles in the US and, for other reasons, if there is turmoil in the economy, we'll use it at that time. Why use it now? Could be one very good way of looking at it. And the other one saying that, you are yourself saying that second half is not going to be so good. There are a lot of one-offs in the first half. Last year, because of elections, there was hardly any capex spend in the first half. This time, the capex spend over last year by the government is 40% higher. They can't repeat that in the second half. Base is also higher. And they don't have that much money because of the tax cuts. Likewise, exports. All of it, much of it front loaded. Again, it might weaken in the second quarter because the trade bogey is not going away. So, growth is not as strong as it is. Inflation is lower. You better cut. That's the other argument. Now, the market will get to know in 5 days.
Of course, counting down to Friday. But in terms of the growth forecast, a lot of these brokerages have increased it to plus 7%. I think RBI's growth forecast is 6.8. That's what they raised it to last time. So, doing the math, do you think it will now go up further? Or should one look out for...
See, the CEA very guardedly said above 7. But the average I've got 4 or 5 readings from people who I spoke to over the weekend. And it is, SBI and Kotak are at 7.8. There's someone else at 7.5. I think it was ICRA. HDFC Bank is at 7.3. So people are well over 7%. I think the average will easily come to 7.5 or 7.6 in terms of expectation because the first half is 8. Even if now this quarter looks good because of the GST cuts, etc. So even if we do a 7% in this quarter, we are not going to do like 5.5 in the fourth quarter. So the average just goes above 7 and goes to even 7.5 willy-nilly. Like I told you, the only fly in the ointment is it doesn't feel like an 8% growth. Are you seeing such a surge in wages? No. Are you seeing such a surge in rents? Usually an economy that grows so high will push up inflation. If inflation is not going up, then demand is not as strong as the output seems to indicate. There is going to be this narrative, it's all said and done a great place to be in, where growth is consistently surprising above expectation and inflation is surprising below expectation. So let's not grumble too much.
Okay, let's not grumble too much. And of course, when it comes to the rate cut or no rate cut, we'll discover in just 5 days' time on Friday when we get the RBI policy outcome. But of course, we will touch base with you then as well.
Sure.
Latha, thanks a lot for taking our time and joining in and putting things into perspective. Always a pleasure.
Thank you.
Thank you.
Thanks for having me.
Thank you. Well, on that note, we'll shift focus to the markets then. Just about 4 minutes to go for the markets to open. Let's understand the setup. Of course, we are coming out of a week where we did manage to hit a record high on the index level. Mind you, portfolios not looking all that great. You didn't really have mid and small cap indices hitting fresh highs. But benchmark level, of course, we managed to hit a fresh high on the Nifty and Sensex both, and the Nifty Bank Index as well last week. In terms of the setup, of course, we will be digesting those strong GDP data as well. But let's bring on board our technical expert and ask him what are the next levels to watch out for today on the Nifty. Joining me, Rajesh Palviya, Senior Vice President Research, Head Technical and Derivatives at Axis Securities. Rajesh, thanks a lot for joining in this Monday morning. We did fizzle out a bit after hitting record highs. The bulls did lose some of their mojo. But, what is your sense? Do you think we'll resume the up move, given the fact that we have quite a few, data points to digest in terms of GDP data, and a lot of these auto sales numbers will also trickle in. So, by way of cues, we have a lot to watch out for. What is your sense as to where the index is headed from here?
Good morning, Nandita. So yeah, definitely. So large cap space is showing sign of strength, but yes, broader market still consolidating. But looking at the overall scenario, we believe that the way Nifty is now making a higher high-low formation on the third consecutive month, we believe that it is a clear sign of sustained buying action. And the way long built up is there in derivative data also, some short covering is already played out for Nifty in last couple of days. So I think if we sustain about 26,200, there is a high possibility that this rally can extend further to 26,400, 500 zone in the continuation of this up move. As GIFT Nifty is also indicating that we are going to have a positive opening. So I think we are going to have another series of new all-time high trajectory for Nifty, and possible rally towards 26,500 we could see. At this juncture, one needs to trail stop loss towards 26,100 to hold their long position. Bank Nifty is showing a sign of strength. Here we believe that this rally can extend to 60,200 to 400 in the continuation of this up move, as most of the PSU private banks are showing good buying interest, as well as NBFC space is also looking very attractive. So Bank Nifty we are holding bullish view, and at this juncture 59,500 needs to keep as a trailing stop loss. Target is 60,300 to 400.
All right, banks looking strong, and if the pre-open is anything to go by, we are looking at fresh highs on the index. In the pre-open, we are at 26,325. The record high levels were 26,310 or thereabouts, just about 10 odd seconds for the first ticks to start coming in. 0.5% uptick. Let's see whether we manage to hit a fresh record high today again. Yes, the first ticks are coming in. 26,285. That's where we are at the current juncture. 83 points up on the Nifty. So yes, a good almost 100-point up move there. The Sensex fresh record highs. 86,015 was where it was at last time I checked. But yes, we have managed to hit a fresh record high in terms of Sensex at the open. Mid cap index moving in tandem with the benchmarks as of now. 0.3% kind of a gain coming in there. Breadth looking fairly strong. 5:2. But let's wait for it to settle down before really calling it a trend. Bank Nifty, just around that 60,000 mark as we speak. I think hitting fresh record highs. I'm sorry, 57,000. No, 60,000 almost. So yes, that's another fresh record high for the Nifty Bank Index. If you look at the other sectors, then some of the movers of last week. Let's see whether they managed to edge back into the green or not. In terms of the sectors, we did see the Nifty Bank Index doing well on a weekly basis as well. That was the top Nifty or top, in fact, sectoral mover. Yes, last week even Defence Pack managed to do well. So let's see which are the sectors that are taking the lead at the current juncture. Well, my computer is still opening up, but in terms of the individual movers, we'll focus in on that first. It's JSW Steel that's taking the lead, up 1.5%. Tata Motors ahead of the auto sales figures that trickle in. Tata Motors is in fine fettle. M&M, Bajaj Auto, these are some of the auto names that are doing well. Reliance Industries is also holding out. 0.5% gain coming in on the shares of Reliance Industries. L&T, that's another one that's doing well in tandem with other movers. But I want to move in and take a look at some of the cigarette makers, the likes of ITC. ITC is the top laggard today. Shares of the cigarette makers, tobacco makers were supposed to be in focus. The likes of Godfrey Phillips, VST Industries as well. The winter session of Parliament begins today, and sources have told Network 18 that Finance Minister Nirmala Sitharaman will be introducing a health security and national security assist bill in the Parliament today. The cess will be on production capacity, including machines, processes, and all aspects in the production of cigarettes, gutka, and pan masala. Now, this is according to sources. The new cess will replace the existing quantum of compensation cess levied on cigarettes, gutka, and pan masala. Now, currently, tobacco products have 28% GST, and the compensation cess, which ranges from 5% to 290% depending on the type and format of the product. Now, on the implementation of this cess, the GST on cigarettes, pan masala, and gutka will turn into 40%, and the rest will be absorbed under the health and national security cess. But the tax incidence for the consumer remains the same. So, basically they will be taxed at the capacity, not just the capacity, actually the production that they do. So, that's something that will be changing, which is why some of these cigarette makers are in focus. What would you do with some of these names? Godfrey Phillips, ITC, VST Industries. Rajesh, any thoughts on how to navigate some of these stocks?
So I think Godfrey Flip is still in downtrend. If we analyze the weekly structure, this is the fifth, sixth consecutive week where stock is forming lower high-low formation, which is a sign of sustained supply pressure. So I think stock is in downtrend. Stock is trading below to all its near-term, short-term moving averages. So I think we could see further more pressure in this counter. On the downside could be 2700 would be the next immediate level where we can see stock to slide further. So I think my advice would be avoid at this juncture as the trend is still weak. Again, ITC is also hovering near to its critical and important support area of 395, 390 zone, which is very important for ITC at this juncture. If it's break below 390 zone, I think we could see more profit taking to initiate, and then possible down move towards 380, 375 we could see in the near term perspective. So wait for this outcome 390. Those who are still holding the position 390 needs to watch closely whether it's able to defend or not.
Okay, that's the view. Avoid is basically the call for some of these stocks. But as we can see, the Nifty Bank Index, crossed that 60,000 mark at the open, 60,114. That's the new all-time high for the Nifty Bank Index. Of course, we both know, in fact, all of us know that both the end of the spectrum, PSU and private names, are doing well. But any thoughts as to which ones are looking attractive from a trading perspective for the week?
So definitely banking space where we are focusing, and the way Bank Nifty is holding the strength, I think yes, one can remain on the buying side of trade for banking stocks, as well as NBFC is also showing sign of strength. So this pocket is likely to witness more buying and interest. So be it private, be it PSU, both baskets are looking attractive in the banking space. So from PSU banking basket, I think SBI and Indian Bank, these two banks one can focus at this juncture for trading point of view. SBI is clearly showing sign of strength, and again whatever minor dip which we are getting in this counter is attracting buying interest. So I think any breakout above 1000 can attract more buying interest, and then possible target towards 1040, 1050 we can see for SBI. So buy and accumulate would be the strategy. On the downside 970 needs to keep as a stop loss, positional stop loss. Again, from the private banking basket, HDFC Bank, one can focus at this juncture. The way this stock is almost hovering near to its all-time high trajectory, some consolidation is happening. But looking at the near-term, short-term structure, we believe that stock is ready to give a breakout of this multiple supply zone. Once the stock crosses about 1040, I think here we could see good run up towards 1150, even 1200 kind of zone also. So HDFC Bank, ICICI Bank also one can keep on their buying list from the banking space.
Okay, SBI, ICICI Bank, some of these names you can keep on your radar from the banking pack. Of course, turning out to be a good session this Monday. We've had record highs when it comes to Nifty, Sensex, the benchmark indices, of course, and the Nifty Bank Index as well. But another pocket that will be in focus today would be the auto basket. And as we saw at the start, most of these names, the likes of M&M, Bajaj Auto, they are trading with good gains at the start. But auto sales figures have started, or in fact they will start trickling in. The expectations are that the overall volume momentum is likely to be positive. Of course, in terms of channel checks, the key surprise would be a pickup in demand for CVs that has been lagging thus far. For passenger vehicles and two-wheelers, conversion rates of inquiries picked up following GST cuts. In fact, higher number for marriage dates in November will support demand. For passenger vehicles as well, backlog of bookings and low inventory creates space for high volumes. Anything that you're keeping on your radar from the two-wheeler pack, from the four-wheeler pack as well? M&M, we've seen marquee launch as well last week for M&M, and for Bajaj Auto, Hero MotoCorp. The traction really continues. Which one would you ride? For the next 1 to 2 weeks?
So I think auto as a pack, one can keep on their buying list as the looking at the traction in four-wheeler, two-wheeler space in terms of price action. I think this sector may deliver good rally in the near-term perspective also, as overall long-term, medium-term structure is on the positive side. Though it's a mixed behavior within auto basket, but looking at the large cap like Mahindra and Mahindra, here stock is almost trading near to its all-time high trajectory, and the way stock is making higher top higher bottom formation on daily as well as on the weekly charts, it clearly shows that this stock has potential to extend its gain. And maybe those who are looking for some positional perspective, I think we believe that 3900 to 4000 would be the next trajectory for Mahindra and Mahindra. So buy and accumulate would be the strategy till stock is trading above 3680 kind of zone. Again, Ashok Leyland, it's again clear outperformer from this automobile basket, and the way stock is trading near to all-time high trajectory here also, we believe that this stock has potential to extend again towards 165 170 zone also. So Ashok Leyland is also buy with stop loss of 152. From two-wheeler space, I think Hero Motor is clear winner, and the way stock is moving in upsloping channel on a daily weekly chart, we believe that this is a sign of sustained buying action. Stock already managed to give breakout of previous swing high of September 2024. There is a clear rounding bottom formation on Hero Motor, and looking at this formation, we believe that once stock manages to sustain above 6200 level for next couple of weeks, I think on a positional perspective, the chart pattern indicates that this stock can extend its gain towards 6800, even 7000 level also.
Okay, that was Hero MotoCorp that Rajesh was referring to. So M&M and Hero MotoCorp, those are the levels to watch out for. Another stock on my radar this morning is Lenskart. Given the fact that numbers came out over the weekend and they've been pretty strong, the stock is reacting to that as well. It's up somewhere around 3% or so as we speak. The profits have jumped 20%, revenues over 20%. If you look at the year-on-year picture, margins have also come in higher at almost 20% vis-a-vis 16.5% on a year-on-year basis. And even if you compare the quarterly figures with the last quarter, 70% jump in net profit compared to the last quarter, and exceptional losses have also come in at nil. No exceptional losses this quarter, and margins and revenues have also shown good growth. Hasn't been a lot of time, of course, since Lenskart listed. But looking at the charts, what have you done with Lenskart? Would you advise any? Would you have any call on the stock right now? I know the data is pretty limited, but nevertheless, the kind of trajectory you've seen post-listing, what do you make of the charts?
So within the limited data, I think the previous swing high is the immediate hurdle based on the limited data setup, which is around 438 zone. So I think 438 may attract breakout over 438 may attract more buying interest, because that was the high post-listing stock has registered. So above 438, yes, there could be a possibility of 450, 460 zone on the higher side. At this juncture, looking at the near-term, short-term structure, I think one needs to trail stop loss towards 410, those who are trader in nature. So 410 is the key support area for near-term trend.
Okay, 400 will be the key support area for a Lenskart. But another stock that's we've been grabbing attention is Lupin. It has received approval from US FDA for a biosimilar. In fact, that is used to reduce the risk of infection in patients with non-myeloid malignancies. Uh, from the pharma pack, I think Lupin has seen good traction in the last week or so. It has gained somewhere around 5%. Any thoughts? What are the structures looking like when it comes to Lupin, Dr. Reddy's, Sun Pharma? Would you look at any of these names right now?
So as we discussed, like, a sector like banking, then NBFC and automobile, another sector where we are holding bullish view at this juncture is pharma. And some of the pharma stocks like Lupin, Sun Pharma, Laurus Lab, these all stocks are looking very attractive in terms of short to medium term structure. Lupin, we are holding bullish view. The way stock managed to give breakout of long consolidation range on a daily weekly chart, I think this stock has potential to extend its gain towards 2200, kind of zone. So I think buy and accumulate should be the strategy. On the downside, stop loss needs to place it around 2060. Another stock where we are focusing from this space is Sun Pharma. Here also there is a breakout, and now looking at the little short to medium term structure, now stock is approaching towards May 2024 25 swing high. I think any breakout above 1860 can attract more buying action. Short covering action may trigger above 1860, and then next target for Sun Pharma would be around 1940, 1960 kind of level. So here also one can buy and accumulate. On the downside, 1800 needs to keep as a stop loss. So I think one can focus on pharma space also. This space is also looking attractive. Some of the large cap pharma stocks are showing sign of strength, and we may see continuity of uptrend for next couple of weeks for this sector also.
Okay, pharma in an uptrend going forward as well, and of course take note of all the names that Rajesh mentioned. But on that note, let's shift focus and take up some viewer queries, quite a few of them. Let's get them addressed. The first one coming in on a Karur Vysya Bank. I can't really get the person's name. The handle doesn't really mention his name. Wants to know if it's a good time to enter into a Karur Vysya Bank at the current juncture. So would you look at this bank, or would you look at some other stock like Federal Bank or perhaps Canara Bank? What are your thoughts? What should he do?
So, looking at the technical structure, I think Karur Vysya Bank as well as Federal Bank both are showing a same kind of behavior, and the way these two stocks are trading at all-time high trajectory, I think both stocks are looking attractive on a technical front. Though there is some consolidation is happening in Karur Vysya Bank, but looking at the overall structure, we believe that once the stock manages to cross about 260-65 zone, I think this stock can extend its gain and possible rally towards 290 also, 290 to 300 we may see on the short term perspective. So one can hold on the position if you are already on the buying side of trade. On the downside, 240 needs to keep as a stop loss. Again, Federal Bank is also looking attractive. Here also one can buy and accumulate in minor decline. The way stock is making a higher top higher bottom formation on daily weekly time frame, I think this stock has also potential to extend its gain towards 275 to 80 zone also in the continuation of this up move. Buy and accumulate would be the strategy with stop loss of 250.
Okay, buy and accumulate is a strategy with stop loss of 250. Hope that answers your query. Let's move on to the next one then. This one's coming in from Komal Makecha, wants to know your thoughts on Bharti Airtel for a fresh entry for the long term. The stock of course had a good run. In fact, if you look at the year to date charts, the 6-month charts, but over the last week or so it has lost some bit of a steam. Good time to buy or wait for further dips?
No, so overall structure is bullish for Bharti Airtel, and I think one can keep this stock in their long-term portfolio. It's a wealth creator stock over a last couple of years, and the way this stock has shown buying interest in minor decline, I think this stock has potential to continue its upward trajectory, and possible target in the near term to short term would be around 2200 to 2250. So I think buy and accumulate is the right strategy for Bharti Airtel, and I think one can keep this stock in their long-term portfolio as the stock is holding strength across all time frame.
Okay, a multi-bagger stock, Bharti Airtel, keep that on your radar. From telecom, let's shift focus to the OMCs then. Query coming in on HPCL, whether one can look at it for a fresh entry. You know, when I speak to experts, most of them prefer the likes of HPCL over BPCL. Would you have the same view? And if yes, is this a good time to enter?
So of late, stock has corrected from its recent swing high. Now stock is trading near to its 50-day moving average. I'm talking about HPCL. So HPCL, yeah. On a positional perspective, yes, one can buy and accumulate this counter. Overall structure is bullish. Till stock is trading above 445. I think HPCL is likely to remain in the bullish trajectory for the trade. So one can buy with stop loss of 445 on the downs on the higher side. Once stock crosses above 470, then we could see good rally to unfold in HPCL. But again, if I analyze the BPCL also, almost both stocks have similar kind of structure. Again, on the BPCL, also 345, 348 is the immediate support area for this corrective move. Again, here also, if stocks crosses about 365, I think here also we could see some rally to unfold towards 380 also. So a similar structure for BPCL, HPCL, but if I have to select one, I would go with HPCL.
Okay, that's the view on some of these OMC stocks, BPCL as well as HPCL. Shift focus then to a Wipro. Arun Kumar wants to know your thoughts. I think he has the 250 call of Wipro. He wants to know whether he can hold it or not. You know, we've seen some traction in IT on and off. If somebody is holding a Wipro call, what should he do?
So I think it's almost trading near to 250 zone, and it's at the money call. Some traction was there in IT stocks, but again, there is no sustained buying action is taking place. But as he has already bought, so I would advise here keep a stop loss of 242 on spot prices for the prices. If stock slips below to 242, then you should exit from your call option. Otherwise, hold the position. Any breakout above 253 on spot prices can take this stock further higher to 260-65 zone, where you can try to book some profit in your call option.
Okay, that's about the Wipro call that you're holding. Hope that answers your query. Very quickly, let's just squeeze in 2-3 more queries. You know, there's a query on PG Electro Plus from Shweta Naidu. You know, her buy price is 760, so she's making a loss here. Wants to know if she should book her losses and buy into a Keynes Tech or average further. You know, average PG Electro Last further. What would you advise? Of course, the stock price has halved from its 52-week highs, and she's making a loss here. So, how should she go about it?
So I think whole EMS space has attracted a profit booking in last couple of months, be it PG Electroplast, Cans, and other stocks. So I think if she has already invested in PG Electroplast, I think some signs of bottoming out is taking place in PG Electroplast in last couple of weeks. Looking at near-term, short-term structure, I think stock is showing some pullback action. If stock manages to cross above 620 level, then I think we may see further more recovery. Yes, the buying price is little higher, so it could take some time to recover to the buying price or beyond buying price. But I think even if we look at the Canes also, here also the structure is similar and weakness is already there in the long-term, short-term chart. So I think remain with the PG Electro Plus. There is a possibility of a breakout of 620 and then possible rally to 660, 680 we could see. If you want to average it out, then you should keep a stop loss of 575, whatever quantity you are buying it for averaging out at this juncture.
Okay, that's the advice coming in from Rajesh. Hope that answers your query. But with that, we've come to the end of the query segment. If you're going to take up your queries, don't worry, keep them coming in. We'll take it up tomorrow, if not today. But Rajesh, before I let you go, your recommendations for our viewers?
So I think BHEL is the stock where we are focusing, and we believe that this stock has potential to extend its gain 310 to 315. We are projecting target on a short-term perspective. On the downside, 285 needs to keep as a stop loss. Paytm is also looking attractive. The way stock is now approached to its previous swing high trajectory, I think this stock has potential to give breakout of 1350, and once that breakout takes place, a possible target towards 1400 to 1440 we could see for Paytm. So one can buy and accumulate with stop loss of 1300. And the third stock is L&T, Larsen and Toubro. Stock is making higher top higher bottom formation. Stock is moving in upsloping channel in the weekly daily chart, which is a sign of sustained buying action. So L&T has potential to extend its gain to 42, 50, 4300. So buy and accumulate would be the strategy with stop loss of 4020.
Okay, those are the recommendations coming in from Rajesh. Rajesh, with that, would like to thank you for taking out time and joining in, sharing your thoughts. Always a pleasure, and I look forward to interacting with you again sometime soon.
My pleasure. Thank you.
Thanks a lot. Well, that note, take a look at the market before we bring on board our next big market voice. A cool 100-point rally on the Nifty. 26,306, that's where we are at, sitting at record highs. Even when it comes to the Nifty Bank Index, we are above that 60,000 level. The Sensex as well, firmly above that 86,000 mark. The breadth also looking good at this juncture for a change. It's almost 5:2. That's the NSE advanced decline ratio. Well, to understand where we are headed from here, let me bring on board a big market voice. Joining me is Lakshmi Iyer, Group President Investments and CEO at Bajaj Alts. Lakshmi, it's been a very long time since I spoke to you last. We are perched at record levels, when it comes to the benchmarks. But, one would say that the enthusiasm is really missing because, portfolios aren't all that, happy. 30-40% cut in some portfolios as well, right? So, dichotomy really playing out. What's your sense? How are you feeling about the, up move that we have seen in the market in the last month or so?
Yeah, hi, good morning. So firstly, if you see that, if you look at the last month, we were up about roughly about 2%. Global markets were actually mixed. If you see Brazil was actually up almost 6%, but there were a few markets which were also down, like Korea was down 4%. I think it's a function of how the markets have performed year to date, and I think India is doing that bit of catch up, which is buoyed by multiple factors, including the recent growth numbers that we saw on the GDP front. So I think it's a confluence of the macro factors domestically, of course, with an overlay of the fact that some things on the geopolitical front are looking to ease out. I think it's a combination or a confluence of these factors which lead us to believe that the mood could get only upbeat even now from the current levels.
So mood could get upbeat. So the stark underperformance that we've seen vis-a-vis global markets over the last year or so, we are, would you say that we are set to reverse that in 2026?
Well, I would say that, you are looking at incremental earnings upgrades from the current levels. They may not be necessarily for every sector, but in general, we are seeing that positiveness or that positivity built into the prices. That's point number one. Point number two is that the rate cuts that we've done up until now is definitely helping the cost of borrowing for India Inc., notwithstanding the very recent past. And of course, if you kind of blend all that in terms of the ingredients, I think some bit of catch up. And if the foreign institutional investors, which up until now on a year to date basis have net sold Indian equities, even some bit of recoup buying starts happening because they're ultimately asset allocators, even on a geography basis. I think all of that points towards the fact that some catch-up game is inevitable. And I think this is, as I said, is a global trend that there are these leads and laggards at different points in time. I think the timing is right for India to do some catch-up game for sure.
All right, the timing is right for India to do some catch up, but let's talk about the GDP figures, right? 6-quarter high, 8.2%, but nominal GDP not looking all that great. The gap between real and nominal has narrowed quite a bit. But on the other hand, you also have record low inflation. Put into perspective for us, how are you really looking at the GDP picture? Because as I mentioned, on the real GDP front, 8.2, but look at the nominal, it has remained sub 10% for a while now. How are you reading into this? And what about a case for a rate cut, record low inflation and strong GDP? So the RBI would be in a quandary.
Yes, definitely. So two parts to your question. One is, if you look at the festive indicators and the subsequent demand, definitely that has clearly pump primed some bit of the GDP growth numbers, and we will see some more traces of that or nuances of that in probably the next quarter numbers when that get released. So therefore, there is definitely buoyancy in the growth front. There's no two ways about it. Inflation, obviously, if you exclude the gold part, the actual inflation will be closer to 2.5, 2.6%. I'm not just getting carried away just by the headline numbers. But more importantly, to your second point, when you're looking at a rate cut by a central banker, we need to keep in mind that we've seen 100 basis points of rate cut already starting Feb of last year. Since August, obviously, we've been on a pause. Forward-looking inflation, is it going to remain the same? Well, the answer is no. Is it likely to edge towards the 3.5% mark? The answer is yes. And we are already at 5.5 on the benchmark rate. So I think in that sense, and of course, let me superimpose the growth numbers. Can RBI or would RBI want to take a pause? I won't be surprised. So I think it's not that, and we have to keep in mind that the rate cut that we've seen up until now is one of the fastest pace that we've seen compared to the rest of the world. There, actually, the rest of the world is actually doing a catch-up. So I'd say great numbers on the growth front, forward-looking inflation, if you take that into consideration, case for a pause remains even right now. But of course, it's a close call.
Of course, close call, case for a pause, however, remains. Let's also talk about the currency, right? We saw the currency being in a free fall recently, came by close to 18.5. RBI has also mentioned, of course, that they are not really defending a level for the rupee. While good news for exporters as we wait for concrete details and concrete deal with the US. How is the currency trajectory looking like? 90 close? I mean, would you look at a floor when it comes to the currency movement now?
Well, given where we have reached thus far on the currency, we did again there from a REER or a real effective exchange rate perspective, there was a bit of overvaluation. So bulk of that has got corrected. So I think this part of the year is typically lackluster, especially from a foreign activity perspective. So you could expect a very tight range for the currency right now, but a gradual glide path to the currency depreciation still remains in our base case assumption. So that's not really changing, and that's obviously positive even from bolstering and exports perspective. So I would say that very near term we hover around these levels, probably end the year quite close to these levels, not rooting for a significant appreciation or depreciation. Our fiscal math, I don't think we are likely to breach the numbers that we have set. We'll get more sneak peek into the when the upcoming policy is released, but we're not expecting anything significantly negative on the fiscal front, and which we've seen the last 7 months data. So I think all of that points towards an easing or a stable bias on the currency right now, with the marginal tilt towards depreciation intact.
All right, with the marginal twist to marginal tilt towards depreciation, that's the call. Lakshmi, where are you on this whole AI bubble, talks that's been going on? as you all know, foreign investors have been staying away from the Indian market. They've said that, earnings, of course, they find earnings pretty much, valuations pretty much expensive. Earnings, of course, have been better in the last couple of quarters. In fact, last quarter, as you mentioned, more upgrades than downgrades. But still, one would argue that Chinese markets are still, much more attractive compared to in India. What would it take for FIIs to really return? Would India-US deal, would that be a catalyst? Or would you say that they would want to see much more recovery, when it comes to earnings going forward before making that call of returning to India?
See, I would say that the positioning into any economy or any market has to not really be in anticipation of a particular event happening. I think bulk of the geopolitical situation is clearly easing out. I think India has been giving a constant Agni Pariksha at every point in time, especially when it comes to foreign investors. And I would say 9 on 10 times it is actually coming out unscathed. I think that is dope enough or material enough for the foreign investors to take stock. They've sold 1.5 lakh crores almost year to date this year. I think in the last few years, I would say almost a decade, this is one of the highest numbers that we are seeing. It's a matter of time that they take cognizance. Catalyst definitely will be some solace on the trade front, which is definitely impending, and that would act as a very strong factor for them to come back and hopefully with a vengeance.
Okay, got your point. In terms of the themes, to watch out for in the market right now, of course, we know that defense, manufacturing, they have been that long-term themes that, investors have been looking at. But in terms of investing with a 1 to 2 year perspective, which are those themes that, you guys at, Bajaj are looking at right now?
So I'd say that the liquidity led or the rate led theme, which is more inclusive, the bulk of the population. So the inward looking theme, which is the consumption based theme, the BFSI is something which is a Pharma theme, is something that we like. We are getting positive towards the capex oriented theme. Of course, we have to position a little bit ahead of the markets, though it's not very upbeat on sentiments right now. So I think these are some of the themes that we clearly prefer over some of the outward facing themes, which may still, I would say are in patchy zones of headwinds. So I think some of these sectors which have had the tailwinds will continue its positive momentum into the next 3 to 4 quarters.
All right, those are the themes. But, Lakshmi, I also want to get in your thoughts on this whole IPO rush that we have seen on the Lal Street, the recent listings. There's been a lot of debate over valuations. They're commanding much more than what they have delivered or, what they could deliver in the near future. What are your thoughts? Do you think they are far too expensive and, they need to justify valuations before one could take that investment call in these companies? Or, how are you really positioned on this whole IPO rush that we are seeing on the Lal Street?
So with respect to IPO, I'd say that, there is no cookie cutter approach. There are certain very good quality bespoke opportunities which are coming in the market. And obviously there is a case for participation. But, by and large, our observation has been that with respect to IPOs, it's becoming a money spinning kind of an opportunity especially for the retail investors. So the FOMO effect or the fear of missing out effect is clearly playing out in the IPO market. Looking at the current few lackluster listing or post listing, where we've seen year to date performances, some of the stocks or some of these opportunities, we say that retail investors or bulk of the investors who are just getting into this bandwagon should rather morph from FOMO to JOMO, which is joy of missing out, because as you rightly observed, it is a seller's market, and it's not that any opportunity that comes at any price has to be participated in. So it's going to be extremely nuanced, select stock picking kind of an opportunity that one needs to treat with respect to investments in IPOs.
Okay, one needs to be selective when it comes to these recent IPOs. But what about, gold, the rally in silver? A lot of that, much of that rally has also been driven by FOMO. So, what is your sense? Should one increase their allocation, to gold, silver, precious metals in their portfolio, or should one just maintain it the way they have been maintaining thus far? Your sense?
Gold is not as much of a FOMO kind of a buying. If you look at the data which is available right now, countries like Poland, Azerbaijan, Kazakhstan, these are the countries who are loading up on gold. Also, if you look at the China data, the official numbers are maybe 2.2 tons per month of buying. But if you look at the unofficial kind of buying that China is doing in a more stealth mode, that number could be easily 10 times plus. So I think some of these are the real tangible reasons why gold is reclaiming its peak that we saw just a few months back. And I think gold continues and should be part of your integral asset allocation. Of course, we should not do the mistake of keeping that at the pole position and making that your core allocation, but a tail-ended allocation of anywhere between 5 to 15% to precious metals, which is largely gold and silver. I think the case still remains very, very intact. And I say this despite the fact that gold is all set to reclaim the Student of the Year title even this year, hands down.
Student of the Year, yes. Lakshmi, if I were to ask you, what is the best way to invest in the current setup? Should one look at SIPs or should one go in with a lump sum? What's the best way? Would you still say that SIP is, the best way to get into the market, or how should one really redraw that investment strategy as we step into the new year?
Well, it depends on what kind of strategy you are investing into. So, two parts to it. If you are, a very disciplined investor, then you don't really care of the next new high that it will form. Subsequently, we took 14 months to breach the previous highs. So, I'd say that if you have investments into hybrid strategies, which is a combination of debt and equity, then lump sum is the way to go. But if you are looking at pure equity strategies like flexi cap or multi cap kind of strategies, which is what we really like even in these markets, then two ways to do it: SIPs, which is like a monthly staggered installments, or STPs, which is systematic transfer plan. You get done in the next 3 to 4 months and then finish, shut it and forget it. So I think either or of these combinations would be your fit depending on what kind of strategy you want to have ownership. For balanced advantage and hybrid strategies, clearly there is no necessity for you to do a staggered investments. Lump sum should be the way out.
All right, lump sum should be the way out, and of course, it also depends on your appetite and your goals as well. But Lakshmi, before I let you go, any risks that one must be wary of in this leg of the rally? Do you see any emerging risks, or would you say that now things have really turned positive, and of course next year belongs to India vis-a-vis other global markets?
I would say the latter is true. It's not that the valuations are in a very cushy zone. At the same time, has it gone completely over the top? That doesn't create a case for equity allocation. Again, both of them are not true. So I would say that the biggest risk is that of doing a rear view driving as far as investments are concerned. We have to be very nuanced in our approach. And I say this to all the viewers at every point in time, at the cost of repetition. It doesn't really hurt to have a coach in this market to help you navigate the markets more seamlessly, unless you're so confident that you are a DIY or a do-it-yourself investor, which is like a very small, measly proportion of the country. But for everybody else, I think having a coach, an advisor, a distributor to navigate through this investment cycle definitely is the need of the hour, given the fact that, as you rightly pointed out, last 14 months, if you just had a benchmark Nifty, you're sitting at flat returns. That should not dissuade you, because past is certainly not an indication of the future. And from a risk perspective, I think the world is a fluid world. It's a volatile world. What got you here will not get you to the next level, I think. So be very, very mindful of it. There will be pitfalls as we march along this inevitable journey of growth called India.
Okay, point taken. I think what you mean to say is ishq hai to risk hai, or something like that. I would like to catch up with you outside of this interview as well. some time and get a sense of, how to really navigate, the whole scenario going forward. But with that, Lakshmi, would like to thank you for taking out time. Always a pleasure chatting with you, and look forward to our next interaction as well, hopefully this year itself.
Thank you so much. In fact, markets are right now not in the mode of risk hai to ishq hai. Markets are in the mode of tere ishq mein. That is the latest Bollywood release, by the way.
Okay. Okay, got it. Got your point, Lakshmi. Thanks a lot for taking out time. Always a pleasure chatting with you. Well, with that, of course, take a look at the market. We have managed to hit fresh record highs, not just in terms of the benchmark indices, but the Nifty Mid-Cap Index also hit a fresh record high intraday. The Bank Nifty as well, sitting pretty above that 60,000 level. Even the Nifty Bank Index, mind you, hit a record high. So we had four frontline indices, three frontline indices and one mid-cap index, of course, hitting fresh record highs in today's session. It's turning out to be a good Monday, although we've cooled off slightly from the opening highs, but nevertheless, we are clocking in good gains this Monday morning. Of course, it's a data heavy week. We're just about digesting the GDP data. We have IIP data coming out today at 4 p.m. We have the GST collections data coming out today. Auto sales figures will be trickling in today. We have the winter session of Parliament that's commencing today, and of course, the all important RBI policy meet, outcome, of course, coming out on Friday, and the next week on the 10th we have the Fed policy as well. So yes, lots to watch out for. Last month of 2025, but a crucial one. Let's hope that the Santa rally or the year-end rally has just started, and perhaps even portfolios could see some gains trickling in, given the fact that the benchmarks, as we mentioned, sitting pretty at record highs, but portfolios not feeling the joy just yet. But let's see how things really pan out. But with that, completely timed out on this edition of Opening Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and we'll see you with Closing Bell at 3 p.m. Thank you for watching.